The market is ignoring every warning sign right now, but I'm not sitting on the sidelines. Today, I'm showing you exactly why I'm buying 4 specific ETFs to grow my income and why my Swedish tax strategy makes these boring investments my biggest winners. Welcome back everyone. I'm the Swedish dividend investor. So, here I was getting all excited when the market started to go down, and it doesn't seem to matter at all what happens. The market just shrugs it off. Oil prices are still elevated, something highly correlated to economic downturns, and inflation is on the rise. And the market is still chugging along. Now, I don't do market predictions, that's not my thing. But seeing how things are going, logic says we could be in for some bad times. As always, this is not financial advice. I'm just sharing my own investment journey, my experiences and my analysis. Read the full disclaimer in the description. Whether we are heading towards the end of the party or not, I'm staying close to 100% invested. I want my money to work for me, and I want to keep compounding my monthly income. Since I made the last video, we have a lot of new subscribers, so I thought I should do a quick introduction. Welcome to the channel. I'm Linus, or Linus as we say in Sweden. I invest in dividend and income producing stocks or ETFs, and usually I aim for higher yielding assets. I sometimes do deep dives or analysis of stocks and ETFs. I do spreadsheet bonanzas. I talk about investing strategies and show you my monthly income, and I'm always trying to be as transparent as possible. So, welcome every new subscriber. This is my main base of operations, my dividend tracker. Here is where I track all my holdings. Currently 28 of them. I was close to 40 before, and I'm in the process of streamlining my portfolio this year. I also have a great overview of my income, where it comes from, when, and an estimate of how much I will get paid. I also plan my buying and sometimes selling in my spreadsheet. If you want a tour of my spreadsheet in detail, let me know. So, as of lately, I have started to buy heavily into ETFs, mostly higher yielding and covered call ETFs. Now, before you shut down the video, I know covered call ETFs are risky, they lose value and whatnot. But I have my reasons for doing this. In Sweden, we have special tax advantage accounts. ISK, investeringssparkonto, that's investment savings account. And KF, kapitalförsäkring, or capital insurance. I don't pay any tax on dividends, unless there is a withholding tax. That means 0 taxes on ETFs domiciled in Ireland. But I do pay taxes on the value of my account, regardless if it goes up or down. The annual tax is somewhat variable, but you can usually count on 0.8 to 1% of the total value, meaning having low growth in total value and getting paid dividends is preferred for tax reasons. I won't be talking about covered calls for the entire video. There will be other ETFs and stocks as well. So, let's go through what I'm planning to do. My core 4 consists of 4 ETFs. We have KNG, First Trust Vest S&P 500 Dividend Aristocrats Target Income ETF, a Dividend Aristocrat Covered Call ETF, JEEP, JP Morgan Europe Equity Premium Income ETF, Covered Calls on European stocks, ASWN or PFFI, HAN ETF, Infrastructure Capital Preferred Income ETF. This is a high-yielding preferred shares ETF. And I also have JGPI, JP Morgan Global Equity Premium Income ETF, a global covered call ETF. So first off, I will continue to add to these positions in a somewhat equal weight. JEEP is the newest player in my portfolio. It quickly became my largest holding during March and April. I have a link in the description for a detailed overview of the ETF. Along with the other core holdings, it is about 10% of my invested capital. And since we don't have much more than the first distribution to go on, which was very high, I've gone for a conservative 8.5% yield when projecting the dividend income. Their target is an annual yield of 8 to 10%. If we look at my income by holdings, we can see they are the biggest payer as for now. So my core ride or die 4 will get a lot of attention this year. One thing I love about these ETFs, they are price stable. Of course, they move up and down depending on the underlying assets, but they don't just shoot up when the market goes crazy. For someone like me, who invests and reinvests monthly, this is great. Since I don't like to average up, I like the diversification of my ETFs and they all play a different role. KNG is my exposure to sleep well at night stocks, but with a conservative option strategy, giving me a much higher yield. JGPI gives a global diversification with a yield of around 8%, and it's not global in the usual sense, meaning Nvidia and Apple, you know, the usual suspects of global ETFs. ASWN or PFFI is the stable payer. Preferred shares usually have a fixed call price, so they don't move around much in price. And they usually have a fixed dividend. This is the most boring ETF, but it brings stability in share price and income. Like I said, I will invest and reinvest somewhat equally between them, unless one of them runs up too much. Then I focus on the other 3 and invest when the last one drops in price. My second focus is my separate high yield portfolio. This is a portfolio of high yielding stocks, mostly BDCs and a hybrid mortgage REIT. I like BDCs, and some BDCs even beat the S&P 500 in long-term total returns. This is a case study portfolio I started as a YouTube series during the fall of 2025. I invested to get an after-tax income of above $100 per month on average, with plan to just reinvest the income and see how it does over time. April will be a pretty good month for dividends in this portfolio, so I will reinvest back into what's down the most. By the looks of it as I'm making this video, I would say Hercules Capital, ticker HTGC, and Blue Owl Capital, ticker OBDC. I want to add here, I might add some more capital, but only if 2 holdings I don't own in this portfolio drops significantly in share price. That being Ares Capital, ticker ARCC, and Main Street Capital, ticker MAIN. I hold ARCC in my main portfolio, but I might shift it to my high yield portfolio and add some more capital, so it's about the same weight as my other holdings in invested capital. Main is the gold standard for BDCs, but is often trading at a huge premium to net asset value. The third thing I will focus on will be dividend growth ETFs. Now, this section is if we get a hefty correction. I hold just one dividend growth ETF in my portfolio. XACT Nordic High Dividend Low Volatility, one of my first investments. I have a yield on cost of about 6.2%, and I only buy when the price goes way down. This has worked fine for me as a strategy, and I collect dividends while I wait. I would want to make this a part of my core, but I rarely get an opportunity to buy it. But we also have a new contender for my portfolio. That's right guys, I'm considering hopping on the LNG train. LNG Global Quality Dividends ETF, ticker LDGL. At least start to buy it with very little capital. I have to give this some thought, but I was thinking of investing somewhere around 200 euros per month and aggressively buy more if the market falls. I do like having some growth in my portfolio, and as we can see, not all my income comes from covered call ETFs, but a huge chunk does. Having the stability of a regular dividend growth ETF and still getting paid each month does sound very nice. But like I said, I have to give this some time and thought. If you enjoy my work, don't forget to like, comment and subscribe. It helps the channel a lot. Thanks. So that's where my main focus will be. I know, nothing super exciting, just plain old boring investing. Buying monthly, reinvesting the income, watching it grow, and that's just the way I like it. But I do keep my eyes open for opportunities. Something like VDIV, Van Eck Morningstar Developed Market Dividend Leaders ETF, is something I would love to own, but seeing as how the price has skyrocketed since last year, I'm just watching it. Another one is actually QDIV, Global X Super Dividend ETF. They changed their strategy a bit, and I won't go into details in this video, but the price has been more stable and the dividend doesn't seem to shrink anymore. I'm going to keep an eye on it going forward and see how their new strategy plays out. If the oil price comes down, I might continue my buying of Norwegian oil companies. Massive yields. Even if the withholding tax is pretty hefty, the high yield makes up for it. Both Aker and Vår Energi has very low production costs, so the current dividend should be somewhat safe if the oil price is above $45 to $50. So, in the end, it doesn't really matter what the market does in my opinion. There are always some opportunities out there. I'm trying to position my portfolio so there's always something to buy every month in a bull market or in a bear market. I want to know your plans going forward. Are you staying the course? Are you planning to time the market? Did I just jinx the recovery and start the bear market of 2026? Let me know in the comments. But guys, that's it for today. I will see you in the next one. Until then, stay smart, stay patient, and keep stacking those dividends. Ha det gött!